Quick look at the Indiabulls housing stock before I go any further, and we'll have more numbers and details in just a bit. I think the presentation is being uploaded as we speak. Do we? I think we do have the presentation now up on the screens. So it's a long one. Let me see if I can get to the highlights on essentially the quarter. There is a business update. There is top borrowers and the like, etc. So we'll have the numbers up in just a bit. Okay, 664 is where the stock is. It's actually exactly where where it was before the numbers came through. The other one is DHFL. If I can pull this up, at least on my screen it showed a 14% sell-off. So that is a big one. 14%, 138. And just off the low point of the day is what we have. There's the number. Consolidated NII is up 30% at 2,026 crores, and that's a very strong improvement, which it's seen. They made a provision of 330 crores against their exposure to, essentially lending to Supertech, which has been, as we've been pointing out for months now, a builder in trouble. Will recover 200 crores from the Palace Royal, which is essentially a project right here in Lower Parel in Mumbai. So those are additional details coming in. The stock is now recovered, almost now back into the green. They're also putting out some guidance, Ekta. Will deliver profit growth of between 15 and 16% in FY19 with 1 quarter left, essentially. So I think just in terms of pure numbers, I think these are a good set of numbers, but I don't think anybody expected a disaster from Indiabulls Housing as far as the quarter is concerned.
So
the numbers are pretty good. Yeah.
That's what, Prashant, I just wanted to compare what the NII has grown at compared to what we were expecting. So the NII growth was expected to be around 16.6% this quarter, and compared to that, they've managed to deliver 30% growth. And in terms of guidance, like you mentioned, they've also mentioned with regards to the asset under management, which would grow around 20 to 25% I think that's the flash that went by. Profit growth of 15 to 16% in FY19 and 17 to 19% in FY20. So they seem to be absolutely unperturbed in terms of, the guidance, in terms of what the liquidity crunch and
There's an interesting statement here, Ekta, from the presentation. They say, and I quote, so this is a pretty strong statement, not a single defaulting borrower is able to escape the strong recovery process of the company. Sometimes the recovery process may be delayed due to legal proceedings involved in the SARFAESI process, but the recovery is always certain over a period of time. In the third quarter, that is the quarter for which they're reporting numbers, Indiabulls Housing recovered 125 crores from its already written off pool. So that is an emphatic kind of statement coming in on recovery, saying that, well, nobody sort of gets away without paying. It might take time, but eventually they do all pay. That is what is coming through. There is more information. We put out the PAT growth guidance, etc. I think Abhishek is with us here in our studios, and he's looked at the numbers in their entirety. Abhishek, what do you make of it?
See, the loan growth has come in a bit lower. We were working with a loan growth between 15 to 20%, and it has come in at 16.2%. We knew that the loan growth would taper off. But what is more important is that the spreads have improved massively, and it may be one of the all-time high spreads of 3.46%. Now, if I look at the loan breakup, they have done more of securitization. So, sell down portfolio, which is the off-balance sheet item, that is at 25,000 crore, and that compares to about 10,350 crore on a YOY basis. So, they have sold loans to bankers or securitized portfolio wherein the spreads or the incremental earning is much better than your own portfolio by about 75 basis point to 100 basis point. So, that has led to, a sharp uptick in terms of their spreads, which otherwise would have been dampened down on account of the rising cost of funds. But this is a good point to note that the spreads have improved massively, and asset quality, which was largely to remain stable, has remained stable at 0.79 versus 0.77%. So stable asset quality, but the only figure that has been worrying is the loan growth, which on an average has been at 30% plus, and this spreads looks like a one-off kind of a thing because you securitize only in 1 quarter. They won't be securitizing ahead. As Prashant mentioned, there is no liquidity concern that the company has put out in the presentation. So I don't see securitization increasing at this pace going ahead. So the top line is a one-off, or you can tell it a 1 quarter, earning that they have seen in this quarter.
Okay, all right, Abhishek. Thanks very much for that. So overall, based on the parameters that we have for Indiabulls Housing Finance in terms of the NII, profit growth, as well as in terms of the asset quality, which is flashing on your screen, and the guidance that they've put out when it comes to recovery, as well as the provisions that they've made to Supertech, it seems as though they are not that impacted by the entire liquidity crunch that started and was showed, in the Q2 numbers for around 10 days and entirely in this quarter. So it seems as though they're not that impacted, but we'll go through the presentation with a fine comb and get you more details on Indiabulls Housing Finance. Currently, the stock is just about down by around 0.5%. It had recovered completely, now seeing some profit booking. We'll take a break now, but up next, commodities lined up with Manisha.
This budget is probably going to be a more expansionary budget than the ones we have seen. There is talk of some kind of an agricultural package. We have to see what form it takes, whether it substitutes for existing packages or adds on to existing packages. And presumably there will be some election year benefits for people. I don't know what it will look